Welcome to the August 22nd, 2018 edition of the BitcoinNews.com daily radio show. We cover the biggest topics of Bitcoin, blockchain, and cryptocurrency every day, forever. I am your host, Space Marine.
Glad to be here with you guys. I'm your co-host, Space Cadet. Bitcoin is at 6,400 at this time of the evening. Space Marine.
Affirmative, Space Cadet. Bitcoin went up yesterday. There was a short squeeze. We talked about this in yesterday's show. Bitcoin was sitting around $6,500 yesterday, and there was like a near record amount, about 40,000 short positions on Bitfinex, and a short squeeze happened, a brief one. A short squeeze occurs when the price is rising a little bit, and the price was rising a little bit from like 6,200 all the way up to 6,500, and then some short orders positions start closing because if the price rises, the shorts become unprofitable and they close positions. And the way a short works is you borrow money from the exchange, and then if you close your position, you got to pay back the loan. So they have to buy Bitcoins to pay back the loan, and that causes the price to go up, and then more people have to buy Bitcoins to pay back their loans as they close their short positions, because as the price rises, more shorts have to be closed, and this causes a rapid rise of Bitcoin price. So it went from 6,500 to 6,900 on Bitfinex, and then it slowly leveled off all the way down to just below 6,700 before crashing today, all the way down to about 6,500 again. So like the short squeeze rally has been wiped out. There were some experts saying that the relative strength index is oversold. It still is oversold, which means Bitcoin's below its equilibrium price. So they're saying, oh, the short squeeze rally could have caused it to go up to $1,000 or $1,000 in one day, because basically it's like a little push upwards and then the rally would happen. But that's not the case. It's gone down, and now it's actually below the levels it was at before the short squeeze. It's at $6,400 right now. And overall, Bitcoin's price has been oscillating a lot between about, well, 6,900 is the high hit in a short squeeze, but it's mostly been between 6,600 and 6,200 the past few days, maybe the past week. So the Bitcoin markets are steady, and they're holding above that $5,800 support level, and like 4 times this year since the big rally to 20,000 in December 2017, 4 times since that, Bitcoin's price has crashed hard. It hits about $5,800, and then it bounces right off, so that's like a really good support level. So I think right now is a good time to buy Bitcoin. It might not ever get lower than this, but it might be at this level for a long time. But who knows? So this is probably a good buying opportunity because Bitcoin is projected by many experts to go up back to 20,000, back to 50,000, 100,000. It's never been above 20,000, so I shouldn't say back to 50,000. But experts are saying it's going to hit 100,000. One person, John McAfee, saying he's going to eat his manhood on national TV if it doesn't hit 1 million in like the next couple years. I wish him luck. Now for our first story.
$2.3 million Bitcoin for cash deal goes sour. Space Marine.
Affirmative, Space Cadet. A South Korean businessman who works in Singapore was approached by a Serbian. And at first this Serbian was saying he was going to make an investment into the South Korean guy's company. But then it turned into a Bitcoin for cash deal, a large one. The Serbian offered the South Korean businessman 2 million euros for the equivalent amount of Bitcoins. And they met in France, in the French Riviera. And he did give him a suitcase full of what looked like 500 euro bills, but then the South Korean businessman looked closer. The Serbian left really quickly. The South Korean businessman had this big suitcase of euros. He looked in them. They were poorly photocopied versions of euros. This guy literally put a 500 euro note, which I believe is their biggest note. He put it in a freaking photocopy machine until he had $2 million worth of them, or 2 million euros. And then the South Korean businessman went to the police. He reported him. But the Serbian was like on his own for a while, and he was living it up. He got a 100,000 euro watch. He had like the best luxury car possible. He was living it up at like one of the best hotels in the French Riviera. And they found him finally. They arrested him. But here's the thing. If he spent the money, and this is like with any case where someone gets robbed, if he already spent the money, it's like good luck getting it back. Because he's like, his life's going to be really messed up from prison, and he deserves it. But yeah, he's going to be in prison, then he's going to have like no money anyways. So I don't think the South Korean businessman's going to get his money. And this was a Bitcoin for cash deal. And when you're Bitcoin dealing, Bitcoin for cash is actually the best way to go. So this South Korean businessman wasn't a Bitcoin dealer, but he decided to be a Bitcoin dealer briefly. And he did this one deal for 2 million euros. And cash is the best way to go if you want like an anonymous transaction, a fast transaction. I don't think for large amounts it's the best idea. He would have been better off going to an exchange and just cashing out with a really safe exchange. Because if you just do it with an exchange that's a big company, your chances of getting screwed are much lower. Basically, Bitcoin dealers in general, even I was a Bitcoin dealer, I never tested the notes if they're counterfeit. I got a counterfeit note at least once, like a $20 bill that was counterfeit. So yeah, these Bitcoin dealers are being targeted by counterfeiters because they don't know how to test the cash. And if there's a lot of cash at once, like even like $10,000 at once, they're not going to test every bill. Like someone can give them hundreds on each side of the stack and they can test it, and then the middle will all be like fake. And that happens, I'm sure. But regardless, Bitcoin for Cash is the best way for peer-to-peer trading, but peer-to-peer Bitcoin trading is kind of going like obsolete. It's not ever going to be obsolete. It's always going to be needed in some parts of the world and in some situations. There's always going to be Bitcoin dealers, even if it's not legal. And Bitcoin dealers use like every method possible for getting cash to themselves. Like cash through the mail is common. They use Western Union and MoneyGram, but like with the Western Union and MoneyGram and then all the bank methods and all the prepaid debit card methods, like eventually their accounts get frozen. Like a Bitcoin dealer will go through every single bank in their country and even around the world, and they'll lose all their banks. Eventually they're forced underground, and they have like an underground network, and they're actually stronger that way. So that's what happens with regulation. The regulation is trying to stop them, but it actually strengthens them and turns them into like a massive underground network that's like unstoppable because they're almost purely anonymous. Like if anyone's smart enough to be a big Bitcoin dealer to the point they evolve to the point where all their banks are closed down, they're probably going to know how to be anonymous too. So we have a lot of Bitcoin dealers around the world that are anonymous, and they have these huge underground networks where their name is not on anything. They just have employees, and their employees' names is on things. And Bitcoin for Cash is the best way to go. They accept bank deposits for cash, but then if you can actually do the deal in person, that's the best way because like it's not counted towards the limit of your bank or the limit of your prepaid debit card or the limit of your Western Union. So it's unfortunate that there is still a problem with Bitcoin for Cash. First off, you can get counterfeit bills. Second off, you can get robbed. I used to carry around a machete and a BB gun when I was Bitcoin dealing. I never had to use it, thankfully. But yeah, you can definitely get robbed. There were some really shady people. But back when I was Bitcoin dealing, like, they really needed the Bitcoin dealer. So you can meet with like some really crazy people, but they wouldn't kill you or anything or even rob you because they need you. Nowadays, they don't need you. I think there's a lot more likelihood of getting robbed if you're doing it nowadays. There's like Bitcoin ATMs everywhere. Like almost every gas station I go into now, and this is like sudden. This wasn't like this. When I was a Bitcoin dealer, there was no Bitcoin ATMs anywhere. Now they're everywhere, though. Every gas station. So people would buy Bitcoins at the Bitcoin ATM. It's safer and faster and easier, honestly. So if anyone's going to a Bitcoin dealer, they might just have bad intentions of robbing the dealer, and then they go to the ATM themselves and cash out. Now for our next story.
Exchange Alliance unites Gemini, Bittrex, Bitflyer USA, and Bitstamp. Space Marine.
Correct, Space Cadet. They have formed the Virtual Commodity Association VCA Working Group, and they say their main goal, and I believe them, is working on being a self-regulatory organization. Like, they're going to work together and figure out the regulations that they're going to commonly use. Like, they're going to have a common list of rules for customer compliance, for regulation compliance, and they're going to function under similar rules, and they're going to work together to create these rules. And this includes Bitstamp, which is one of the top USD exchanges in the world since the beginning. Bitfinex is a lot bigger now, but Bitstamp used to be like the number one back in the day. And then there's Bittrex, which is like a big crypto-to-crypto exchange, and now they have USD also. These are all USD exchanges. There's Bitflyer USA. Bitflyer is the biggest cryptocurrency exchange in Japan. Bitflyer USA is their American branch of that. And then we got Gemini, which is like a small, relatively small crypto exchange, but they're actually big in the sense that they're right on Wall Street. And they deal with the big institutional investors on Wall Street all the time. That's what they're made for. And Gemini's leading it. And Gemini's owned by the Winklevoss twins. Those are the people behind the Winklevoss Bitcoin Trust that was rejected. So yeah, the Winklevoss twins are really big. They have like millions of Bitcoins, I believe. Like they built up a lot of Bitcoin in the beginning, like millions. And they still haven't really made the moves they're going to make it. I think they're going to be huge. But now they're forming like, I want to call this a cartel, pretty much. Because they have all these big exchanges, and they're not the biggest actually. Like Huobi, Binance, Bitfinex, and OKX are a lot bigger than these four exchanges that form the VCA Working Group. So basically we have smaller exchanges, but they're still pretty big. They have lots of money and power, but they're nowhere near as big as the big ones. I think if they put themselves together, and this is why I think they might be more like an alliance or a cartel than like a self-regulating organization, as they call themselves. If they put themselves together and really work together to make more profits, and they use strategies to develop their businesses together, and I think they'll be doing that too. Why not? Of course they're going to be trying to make money together. And then they could become a whale. Like they could unite and become like a whale the same size of Binance or something like that. So I think that's really what's going on here. And even with the regulations, Yeah, if they're trying to like work on the regulations, get better deals from the governments, and be more compliant with the regulation, it is better that they work together. So at the very least, they are saying they're working on regulations. I think they're actually working on developing their business strategy so they become like a whale instead of being small fish in an ocean filled with whales. Because a lot of these exchanges have like very low volume. Like that's what I was saying. Bitstamp has less than $100 million per day of trading volume. Bittrex has less than $50 million a day. Gemini has like around $25 million per day. Meanwhile, the big exchanges like Binance, Bitfinex, OKX, and Huobi have $500 million to $1 billion a day of trading volume. So maybe these exchanges unite, they can get up to that top rank collectively, or maybe even by themselves if they really, like for example, they're actually open to more membership. So they might unite all the exchanges in the world into like a big cartel / alliance thing.
Great strategy.
Affirmative Space Cadet, that's the best way to do business, cartel it up. Now for our next story.
China released their crypto rankings, Space Marine.
Affirmative Space Cadet. China has been releasing cryptocurrency ranking lists. This is their fourth list. They're releasing one every month, and this is made by the China's Center for Information Industry Development, the CCID. I don't know how that acronym adds up, but that's what it is. It's CCID, probably because of the language difference. And they rank 33 cryptocurrencies now. They started with ranking 28 of them. And just to get to the point of this, their rankings are a lot different than CoinMarketCap. Like CoinMarketCap just simply ranks cryptocurrencies with mathematical factors like trading volume per day and market cap, which is the price of the coin times the total supply of the coin. The Chinese rankings are subjective. They base it on technology, application, and innovation, and they decide this subjectively, and they don't really disclose exactly how they're calculating this because they can't. They're just doing subjective analysis. And really strangely, number 1 in the rankings is EOS, and number 10 is Bitcoin. And we've talked a lot about both of these cryptocurrencies on this show. Bitcoin is obviously a lot stronger than EOS. It's number 10 while EOS is number 1. Bitcoin has a market cap near $111 billion right now. EOS has a market cap of $4.3 billion. It's like just so far different. It's crazy that they would rank it like that, really. But I think I know the reason. EOS has a team of block producers that meet over a conference call like every day. And they actually could freeze accounts and freeze transactions and stuff like that because they mine the blocks, these block producers, and no one else. So they can unite together and decide we're not mining that transaction. We're not going to mine anything for that account. So basically, China likes it. China wishes EOS would become the number 1 currency or cryptocurrency, because then they can really impact the crypto world. Because China could go to the EOS block producers like, you better freeze this account, or we're gonna sue you, we're gonna arrest you, we're gonna send in our military, we're gonna drop a nuke on you. So it's not good to be centralized if you're a cryptocurrency, because China really hates Bitcoin. Not completely, but they banned like Bitcoin to Chinese yuan trading, and the Chinese yuan is the fiat currency of China. So they banned like all fiat to crypto trading in China. And they're saying Bitcoin's number 10. They're saying Bitcoin's the most innovative, but somehow it falls so far behind on the other things like technology and application, which is not true. Bitcoin's ahead on everything. It's ahead of every cryptocurrency in all the categories possible, and more than the categories they say. So that's basically just a summary of it. I'm not going to go through the whole list on this show, because their rankings don't even make sense to me. It's just important to note that China is releasing crypto rankings, and the rankings basically favor centralization. And the Chinese government does not like Bitcoin because it's so decentralized. It allows people like economic freedom, and that's not what they're aiming for. They want control. They actually like blockchain technology, though. China's really into blockchain technology because you can actually apply blockchain technology and make things even more centralized, actually. It's kind of like nuclear weapons. Nuclear power was made to make energy way more efficient, but then someone's like, oh, we could turn it into a nuclear bomb. So that's kind of like the way this works. Like, Bitcoin is made to make everything decentralized, but Bitcoin is built on blockchain technology. You can actually control the world even more with blockchain, I would say. So China's really into blockchain. It's like, when you have powerful technology like cryptocurrency and blockchain, you could basically use it to your will. You could design it to be evil or good. So hopefully the good wins out over the evil like it always does, but it'll take time. On to our next story.
9 Bitcoins ETFs are rejected in the same day.
Affirmative Space Cadet. The Securities and Exchange Commission, SEC, of the United States has not really liked Bitcoin exchange-traded funds so far. The market was getting really excited about exchange-traded funds last month in July, and the market rallied from around that $5,800 support level all the way up to $8,500. Right before the Winklevoss Bitcoin Trust ETF was rejected. And then the Solid X Van Eck Bitcoin ETF was rejected. And now, August 22nd, 2018, the SEC rejected 9 Bitcoin ETFs in one day. We talked about the ProShares Bitcoin ETFs on the last show. Those were rejected, and that's actually good. The ProShares Bitcoin ETFs were based on the futures markets. So they had no Bitcoins backing them, and they were basically paper Bitcoins based upon paper Bitcoins on the futures market. So it's like double paper Bitcoins. So I'm glad the ProShares got rejected, honestly. We don't need more paper Bitcoins. Paper Bitcoins are bad for the Bitcoin market because it dilutes the Bitcoin price. Like, Bitcoin's price would be higher if there's no paper Bitcoins in the world. Unfortunately, there is a lot of paper Bitcoins going around on like BitMEX and also these futures exchanges in Chicago. So Bitcoin's price would probably be a lot higher without all these paper Bitcoins, and it's not a good trend to get into. It would be really bad if a paper Bitcoin ETF like ProShares was the one that was accepted, because then investment brokers would tell their clients, like if a client asked, hey, I want to buy some Bitcoin, like, yeah, I have some Bitcoin for you, and they would sell them paper Bitcoin ETFs instead of selling them actual Bitcoins, and the clients wouldn't even know the difference. Like, if someone goes to an investment broker and says, hey, I want to buy some gold for my portfolio, they would sell them paper gold. And they especially do this because actual gold's a little more expensive to buy because the paper gold's worthless. So the paper gold's a little cheaper, and also it's a long-term investment. So these people usually, like the investment brokers counting on these people never selling it, and then they die. So like they take their money anyways. That's what they're hoping on with the paper gold. And if they had a choice, they would give people paper Bitcoins instead of actual Bitcoins, unfortunately, I think. That's just how they operate. So, back to the topic. There was many other Bitcoin ETFs rejected. So 2 of the ETFs were from ProShares, and these were paper Bitcoins based on paper Bitcoins. They had 2 different ones, short and long. They also had 5 Direxion Bitcoin ETFs. And these had leveraging, and there were bear and bull versions of Direxion Bitcoin ETFs. The bear versions are like short sale positions. So if the market went down and you had the bear Direxion Bitcoin ETF, you would make money. And they have leveraging like 1.25, 1.5, and 2. And this is basically like they're magnifying the amount the market moves. So people can make more money if it goes down more. Like, no, if it goes down, they'd make more money than if they just shorted it normally. They would make like double if they bought the 2x bear Direxion Bitcoin ETF. And then the bull ones were just long positions. And this wasn't based on actual Bitcoins either. It was more paper Bitcoins. And they got rejected. And finally, there was the Granite Shares long and short Bitcoin ETFs. These were rejected as well, bringing the total to 9 rejected in one day. And they kind of copy and pasted it. Now to get to why they rejected these, they said specifically, the Commission is disapproving this proposed rule change because, as discussed below, the exchange has not met its burden under the Exchange Act and the Commission's rules of practice to demonstrate that its proposal is consistent with the requirements of the Exchange Act. In particular, the requirement that a national securities exchange rules be designed to prevent fraudulent and manipulative acts and practices. So they're saying it's not the Bitcoin ETF proposals is why they got rejected. They're saying the whole Bitcoin market is so prone to fraud and manipulation that nothing involving Bitcoin will be approved. So these people could keep sending proposals to the SEC, but it's very likely any proposal for Bitcoin exchange-traded funds will be rejected. Fortunately, the SEC wasn't able to block an exchange-traded note, an ETN, and now this exchange-traded note is trading live in the United States, and this provides a great alternative to an exchange-traded fund. There is no exchange-traded fund for Bitcoin, but there is the ETN, so people could buy Bitcoin via the ETN, and this ETN is better than like all of these Bitcoin ETFs that were rejected today. This ETN uses actual Bitcoins. If someone buys a share of this ETN, the company in charge of it buys some Bitcoins too. So they're protected from market fluctuations, and this effectively means if you buy the ETN, you're indirectly buying Bitcoin, and it affects the global spot price of Bitcoin because it increases Bitcoin demand. And then in November 2018, we have a lot to look forward to coming up to that, because physical Bitcoin futures are going to go live on Backed. Probably it has to be approved by the Commodity Futures Trading Commission, CFTC, but it's very likely it's going to be approved. So we're going to have physical Bitcoin futures instead of these cash Bitcoin futures we have in Chicago, and that'll provide a direct way for people to buy Bitcoin through a regulated exchange on all the major stock trading platforms, basically, because the futures are going to be settled in one day when the physical Bitcoin futures come out. So people will buy physical Bitcoin futures and get Bitcoins the same day. So that's going to be an excellent way for institutional investors to buy a Bitcoin. That's all we have for you on this August 22nd, 2018 edition of the BitcoinNews.com radio show. Be back tomorrow for another episode with the biggest stories in blockchain, crypto, and Bitcoin. And go to BitcoinNews.com 24/7 to read the full spectrum of blockchain, crypto, and Bitcoin news. If you read BitcoinNews.com every single day, you will definitely be an expert and up to date and on the cutting edge of the Bitcoin world. This is your host, Space Marine, signing out, getting back in my spaceship, going back to my space wife.
And this is Space Cadet. Thanks for listening.
Adios, amigos.